Hello guys and welcome back to the channel. So in this video I want to talk to you about two things. One of them is Palantir, and it became the first stock for me that has basically gone up 200% since I bought it. To be honest, it's missing a few cents to be exactly 200% up, but yeah, we can see it was a big winner. So I want to talk to you about what my regrets are and what my thoughts are looking back on my Palantir journey. And then the second thing I want to talk about is that I got margin called on Rocket Lab, and I actually lost half my position on Rocket Lab. And I want to talk to you about what went wrong. And I wasn't sure if I wanted to speak about this publicly, but I think it's important to be transparent with with our gains, and also when we make stupid mistakes. And we are all here to learn, and I'm also here to learn. I'm learning every day. So I want to tell you what happened, how I handled it, and what was the outcome. And if you like this video, please make sure that you subscribe, and let's get going. So Palantir, this is the first stock that I invested in after basically changing my paradigm. And I used to be a technical trader who was in and out of stocks, and I was trying to trade on swing trading. And I'm sure if you have listened to this channel, you know that me and my dad, we put a lot of time into technical trading. We were practicing on the weekend. We were every day half an hour before the close, we're watching all the stocks that could be trades. We were, doing different filters, and we would stay later than the market closed. And we really outperformed the S&P 500 in the bull market. And then, the market reached its peak, and then the market started going down, and then we started again outperforming the market. And after, meaning that the market went down an X amount and we were going down like 2X amount. So we were outperforming the market on the way up, and we were outperforming the market on the way down. And after 1 year, we still outperformed the market, but it was by like 2% or something. And I looked at the amount of time that I spent trading the stock, trading on the stock market, and I realized because basically my alpha was this 2%, right? So if I spent, let's say my portfolio was $100,000, and if I just put the money on the S&P 500 and I make 9%, or I actively trade and spend 10 hours per week, and instead of $9,000, I make $11,000, then those extra $2,000 is what my hours are worth, right? And I basically realized that if I would have gone and worked at McDonald's, it would have been a lot better, because I could have used that money to put into the S&P 500 instead. And then my 9% would have not been on the 100,000, but maybe on the 130,000 or 40,000. And it would have been more than what I would have made with trading. And then I realized that sometimes trading is a gigantic scam. And it's not important how much percentage you make on the money necessarily. Sometimes what can also be important is how big your capital is. And I'm actually quite good at making money. I have a startup or like a real estate company where we are building hundreds of apartments. Currently, we're not doing good because, it's high interest rates. It's not good for cars and real estate. But when the company is going good, I have quite an easy time to make capital. And I realized if I would just focus on that, and instead of trying to trade the market, I would pick a few stocks that I have researched and have very high conviction in, and then I would do nothing, just sit on them, I would be much better. So Palantir was sort of the proof of concept for me. The first company that I really got my eyes on, and I started researching, and I really liked what I saw. And these are the buys that I have made. And you can see when I started buying, it didn't go my way. Every buy was lower, except for the last one that was a bit higher somehow. And then the stock didn't go anywhere for almost a year. And then it doubled and more than doubled in no time, and then it went sideways for 6 months, and then it went again like 50% in 3 days. So it feels very nice, and it's so funny that I made more money with these 5 trades, which basically took me, I mean, you know what it's like because I already did all the due diligence. So let's say the due diligence was 100 hours, and I think it was more. And then to do the actual trades is like a few minutes. And then I didn't do anything. And it's so interesting that this year we already made something like $50,000 because of work that I did in 2022. And it feels very, very nice. So my regret is actually because when the stock was going down and, you know, we were here and I was buying at $11 and then the stock went down, I was like, shit, why couldn't I just wait? And, you know, then my cost, the cost basis would not be $8, it would be 7 something. Or, you know, why didn't I buy more heavy when it was $6? But the funny thing is, I don't even remember what my exact cost basis is because it's not so important. But what I do remember is I had an extra 30,000 in my account that I was thinking about buying Palantir with. And if I would have done it, I would have an additional $60,000. And it's such an interesting opinion because I had other YouTubers who talked about this phenomenon that in the end, it doesn't matter if you buy it for, you know, a cent more or less or $1 more or less. If you pick the right company, it's going to, you know, 10x, 15x in the long run. And then all you're going to remember is that you didn't buy enough. And this is so true. I literally have the same regret, and already now those extra $30,000 would be $60,000. And if Palantir goes, you know, 3x, 4x, 5x from now, those $30,000 would be $150,000 that I didn't make. So that's very interesting. Anyways, really, really congratulations to all the people who have kept with Palantir, and it's just such a nice journey, and I'm so happy retail is making money on this, and I'm so happy that you guys keep coming back to this channel and, you know, other channels also, and you get your data from here. And it just shows that whatever we are doing on finance Twitter and on YouTube, it actually creates value, and people can actually, you know, change their lives with it, and it's just very, very beautiful. So on this note, on to Rocket Lab. So on Rocket Lab, I actually got margin called, which really, really sucks. And what happened is I started looking into options, and I started looking at using margin on my account to sell put options, because I had a logic that me and my dad have a rhythm of how we send money to our trading account. And the logic was that we are anyway sending $100,000 next year to the account. Why not use those $100,000 to write or sell put options on Rocket Lab, which we would anyways buy if it was in a certain price range. And it sounded like a win-win idea, you know, like I can't lose on this idea. And by the way, the reason why I didn't want to talk about this is because I think options are very, very risky. And I don't think that it's for, I don't think it's for everyone. It takes, I think, a lot of learning, a special type of personality who really can stomach volatility. And this is why I try to not talk about this on the channel. So that's reason number 1 and 2 and 3. But because I do mention it, I think it's also important that I mention when you know, I do something stupid and it backfires. So I don't want to go into the exact strategy what I was trying to do. The point is, like, I realized that you can use margin to sell puts, and then I was researching because I didn't know about selling options and covered calls and puts, and there's so many strategies. There's iron condors, there is put credit spreads and debit spreads and poor man's covered call, and it's a whole universe when you open the door, okay? And one thing led to another, and I realized that you can buy your positions back. So actually, like, we can go a little bit more into margin. And then I sold a very long dated put on Rocket Lab, which would basically put our price to $3.80. And I got $46,000 for having the option of buying Rocket Lab at 380 if this stock gets access. I mean, the strike price is at $5. But the point is that it comes to my inexperience, and I didn't know how the margin and the margin safety is calculated. And I called Interactive Brokers, my broker, and they couldn't tell me. They just said that whenever you buy something, we algorithmically calculate how much margin safety you have left. And basically they couldn't answer me, and I had a very hard time to understand, like, where is my risk, because I started to see that this strategy is basically like a win-win strategy, and it's like impossible to lose money on this. And this is where I went really wrong. I had a phone call with my dad, and I said, I don't fully understand where the risk is, so I want to go to the other end of the risk and go a bit closer to our margin with selling put options. And he agreed that we should do it. And the purpose was more to see how the account reacts and how the margin limits. So I wasn't unpurposely being stupid. It was like I was on purpose being stupid. And so the point is, we did something. I don't want to technically go into it. And we did it at the worst freaking possible time. Basically a few days before they announced the capital raise, and the stock fell 20%. And when you sell puts, basically it's good for you when the stock stays the same. It's good for you when the stock goes up. The stock can even go down a little bit, but 20% in one day, that was not good. And basically the account went so much down that I ended up being margin called, and 50% of my Rocket Lab position was force sold at 392. And I was so pissed. That was a very, very bad day for me. The only thing that actually made me feel better was that, as funny as it sounds, Francisco Ramirez, without knowing what happened, told me that he managed to buy shares at 392 of Rocket Lab, and he was so happy because he feels it's such an opportunity. And those were probably my freaking shares. And Dave G also wrote, I think it was him who wrote on a video that he managed to buy extra shares at 392. And I think one of those two guys have my shares, and I think I'm just happy that those shares are in a good place. And then the funny thing is that Palantir blew up, and that means that the margin on my account came back because I had a much stronger equity position, and I was able to buy back that part of my Rocket Lab shares, so I'm whole again. But this did cost me something like $4,000, and I still haven't closed out my option positions that caused me this loss. And to be honest, because I'm so new at this, I'm not sure what I'm going to do with this. So I'm evaluating it every day. And the reason why this is so interesting is because before this happened, I started to look for if there is a course that somebody is selling that can, cut down this stupidity. And I found a guy who I kind of trust. He's been selling options for 10 years, and he's selling a course for $4,700. Now, on the day when the options went against me, I probably lost $40,000 on the options, which I didn't lose because I didn't close out the positions. I still can lose that amount because the positions are not closed out. Rocket Lab went a lot higher than what it was. So probably on paper, I am maybe $27,000 down, and I had an actual loss because of the shares being sold, and I had to rebuy them of something like $4,000. And keep in mind that I did make $46,000 on one of these positions that I have a very hard time to see I will lose money on. So yeah, but the point is, I was looking at this course, and the course was $4,900 or something, and I was talking to my dad, and Grant Cardone has this has this very good saying that if you think knowledge is expensive, try stupidity, you know? And we were literally talking about having to buy this course the day before this debacle happened with Rocket Lab, and we didn't end up buying it, but we are going to buy it. We just need to finish this position. So my point is, the true risk is when you don't know what you're doing. I think selling options can be a fantastic thing that you do with your account, but you really, really need to know what you're doing. And I don't really want to talk so much about options because I don't want people to go into it and hurt themselves. And this is why I want to talk about what happened to me. And if Rocket Lab would have not fallen during when the market was closed, I could have rolled my position, I could have applied stop losses, I could have applied other things. If I would have sold less options, I wouldn't have been margin called, and I wouldn't be, or if I would have sold half the options that I did on Rocket Lab and half on Palantir, again, I would not be in trouble. It's just I really didn't know what I was doing. I didn't understand how the margin requirements are being calculated. And in a way, I'm kind of happy that this happened, because now I understand where you can go wrong, how the margin is calculated, what happens if you miscalculate. So it's no longer a question mark for me. So in a way, I'm happy. And what do I think of this Rocket Lab thing? So all in all, I'm not jaded by me losing money on this. It's my stupidity. I think management did what was right for the company, and I think this is a fantastic deal. They barely dilute us. They have more money in the box. It was really the prudent thing to go, and I don't see how the stock can go lower. It's as low as it gets, I believe. You know, when you fall 20% in a day, a lot of risk gets taken out, and I honestly think that the real valuation of Rocket Lab is somewhere between $6 to $8 already today. But I realized today that there is a risk that I haven't taken into account, and that is how the market perceives this stock. So I was looking at PayPal, and it's not a stock for me, but a lot of retail investors are buying PayPal. And the only reason why I'm not hot on it is because I used PayPal in my company and I hated it. I think they overcharged me as a customer, and I was trying to get out of using them. Yes, they gave us a higher conversion rate than other vendors, but because of how much they were charging, and their system was much worse than Stripe's system, I was trying to take every opportunity that we could get to not use PayPal. So when I hate a company, Palantir, I'm super excited about the product. I'm all in line with, protecting the West, and I really like Carb's philosophy. Rocket Lab, I'm super excited. I wake up every morning happy that I own the stock. I think it's just so cool what they're doing. And PayPal, I definitely see how cheap they are, but I just hate the company and I can't own it for that reason. So I saw a lot of retail people being very excited about PayPal's earnings, and the earnings came out and the stock fell something like 10%, and a lot of people were very upset. And I realized it's so crazy that when you are doing stock picking, you not only have to predict the future value of the stock, you also have to predict what the market is going to think about it. Because I definitely think PayPal is undervalued, but for some reason the market hates that stock because it's in the finance sector, because of high interest rates or whatever. And I was thinking, Palantir, Rocket Lab has a little bit this similar stigma. Like the company is doing so amazing, but somehow so many investors were burnt with space SPACs. And there's so many space companies going bankrupt and not doing well, And somehow, because Palantir, I don't know why I keep saying Palantir, because Rocket Lab is in the same category, they get grouped in, and somehow the investors are like, oh my God, I don't want to have anything to do with space spec stocks, and that's what's keeping the price down. And theoretically, there is this risk that even if we are right and they're doing everything correctly, the stock might not appreciate for a very, very long time until they do like a Palantir. Palantir was 5 quarters in a row profitable when the institutions realized, oh my God, this is a fantastic company and we need to buy into this. And that for Rocket Lab would come in, maybe they're profitable in 2026, depending on, let's say they're profitable last quarter of 2026, then 5 quarters from that is first quarter of 2027, when the market maybe starts appreciating, and then we would go from wherever the stock was at that time to like 3x in 3 weeks, because the market is like, oh my God, they're different. And to be honest, that is a risk that I don't control. None of us control, and I really hope that it doesn't happen. But it could happen, and I realized that today, and I just wanted to communicate it to you guys. So anyways, this was a very long update. Let me know in the comments if you watched to this part. I'm interested. And if you got value out of this video, and if you like the channel in general, there is a Patreon link in the description box below where you can support the channel. Of course, the most important thing is that you're here and you're commenting and letting me know that you enjoy this content. And I'll see you in the next video. Ciao, ciao.